in spite of gold not going in a straight line, and in spite of you know the world financial markets sometimes booming and sometimes crashing, gold has steadily moved up since then.
Right.
And since the day we bought gold, I have never worried about the gold price. I don't give
Right.
a damn about what happens to the gold price. This is a long-term wealth preservation holding that should be at the base, bottom of your wealth pyramid, and you should never think about what the price is, or value it in fiat dollars, which are or fiat money, which is totally useless, of course.
In a recent warning, seasoned businessman Egon von Greyerz, drawing on his extensive business experience and global perspective, has raised alarm bells about an imminent global banking crash. Von Greyerz strongly advocates for a strategic move towards investing in physical gold outside the traditional banking system as a protective measure against the looming risks. Von Greyerz points to a pivotal moment in economic history, 1971, when President Richard M. Nixon announced the new economic policy, colloquially known as the Nixon shock. This initiative marked the beginning of the end for the Bretton Woods system of fixed exchange rates established post-World War II. Under this system, foreign currency values were tied to the U.S. dollar, pegged to gold at the congressionally set price of $35 per ounce. Highlighting the foresight of the Chinese government, as expressed in their official daily paper in 1971, von Greyerz emphasizes their recognition of the event's significance, proclaiming it as the end of the financial and currency systems. From a historical perspective, the establishment of the Federal Reserve in 1913 under President Woodrow Wilson. While some argue that the decline commenced with the Federal Reserve Act, 1971 emerges as a critical turning point in von Greyer's analysis. The Federal Reserve Act of 1913 empowered the Federal Reserve Bank to manage the money supply, but the currency's purchasing power dwindled as the circulation of U.S. dollars increased. By 1929, the Consumer Price Index had already grown by 73%, signaling a significant loss in purchasing power. Further, data from Visual Capitalist reveals a 98% loss in the purchasing power of the U.S. dollar since 1971. Von Greyerz posits that the impending 1% to 3% decline, when considered a percentage from the current level, could potentially lead to a total collapse. Renowned author Robert Kiyosaki, best known for his book Rich Dad Poor Dad, concurs with Egon von Greyer's perspectives. Before diving into Egon von Greyer's insightful interview with Robert Kiyosaki, subscribe to our channel and give this video a big thumbs up.
In my latest article, I talk about, how when once 71 Nixon closed the gold window, the Chinese in their official daily paper, which obviously came from the government, said that this is the end. Already then, they said that this is the end of the financial system. What America is now doing is the end of the financial system,
Right.
and the currency system. So they were much more clairvoyant than anybody else in the world, and that's, I think, so. The decline of this era started in 71, the way I see it. Now the severe decline, of course, you could say they started with the Fed being formed in 1913, but 71 was really when it all started, and of course, it is so simple, Robert, and that's why you and I don't understand why only 0.5% of world financial assets are in gold, because it's so simple. Since 71, governments around the world have continuously destroyed the currency and the money, and by becoming more and more indebted. And of course, that's just this era. We can go back thousands of years or hundreds of years, and it's happening time and time again. All governments or central bankers or government ministers have to do is to read history, and they know it's going to happen again. And basically, now we've come to the point where all currencies are down 97 to 99% in real terms. Real terms is gold, of course. So we have the final 1 to 3% fall to come. But you have to remember, that's not 1 to 3% fall. That's 100% from now. And that's what I see happening from now on.
1971, when Nixon, this is gold, this is real, this is fake. he pulled it out of this and made it double fake.
Yeah.
And then they tried to tell people that we'd borrow your dollars and put them into treasuries, and those treasuries became as good as this. So they were trying to tell people that the U.S. Treasury, a bond, was just as valuable as this gold. And what you're saying right now, Egon, is nobody's buying this stuff anymore. They're not buying our treasuries.
No, I
Is that what
mean,
you're saying?
nobody outside the Fed will be interested in financing the extravagances of the U.S. government, and in the end, of course, that is the U.S. is already a banana republic. You know, the debt to GDP is now at 130%, and it was, well, just not long ago it was 30, 40, or 50%. So we are in the exponential stage now of this collapse of the US. And on top of that, they've obviously shot themselves in the foot also by freezing the reserves of Russia, for example. And not only does that, it hasn't really hurt Russia badly, but what it does is to hurt the world, because no one is now allowed to trade freely because of restricting Russia. And all of Europe has said, follow the US, which I hate that Europe can't stand on their own without following the US dictates or diktats. And therefore, now the whole world is actually suffering because of this move. And what if you take the Roman Empire, Rome dominated major parts of Europe, Asia, North Africa, etc. But there was always free trade, always free trade. And now we don't have free trade anymore. And that's what's going to hurt the world the most. Restricting trade, and then making commodity prices a lot higher. So we have all the makings now of the real problems in the world.
Egon von Greyerz' perspective on the unlikely scenario of debt repayment is mirrored in the prevailing global economic landscape. Central banks worldwide have resorted to the seemingly reasonable solution of printing more money, a short-term measure that, according to von Greyerz, is poised to propel the world toward hyperinflation. The consequences of this approach are palpable on a global scale, with people experiencing inflation at levels reminiscent of bygone decades. Prices for essential commodities such as food, heating, transport, and accommodation are soaring, prompting concerns about the potential worsening of these effects, even as a peak may be on the horizon. In 2020, central bank digital currencies (CBDCs) took center stage, garnering significant attention. Various countries driven to explore this novel asset type expressed interest in developing their versions of CBDCs. China, notably, surged ahead in this realm, swiftly advancing its own CBDC initiative, the digital yuan. Contrary to the optimism surrounding CBDCs, von Greyerz remains skeptical about their viability. He anticipates that introducing these digital currencies will encounter formidable challenges, echoing the struggles of past attempts and likely failing. The trajectory he envisions foretells an inevitable sequence, a period of inflation or hyperinflation, ultimately culminating in a systemic implosion. Let's get back to the interview.
I'm an optimist as an individual, and I love life. I enjoy people and what I'm doing. But when I see the world and I see the risks, I'm sadly a real pessimist. We don't know what's going to happen exactly, but I'm worried about the risk, and the risk is at an unprecedented level worldwide. We have never had a debt situation in every major continent in the world before, whether it's the US, the Europe, Japan, of course, China, etc., and emerging countries. And what I see, sadly, is that we are not going to go into this exponential phase now, which will be defaults. Banks will go under. People will not. Nobody can afford to repay debts. Not individuals. Everybody's too indebted. A lot of companies can't either. The lending that's taking place, and then we can take. You asked about Switzerland before we started, but we can. Every bank in the world has lent too much, and for example, against property portfolios. So the leverage is enormous. And I don't see any debt being repaid. So the only short-term solution that banks have or central banks have is obviously printing more money. They know nothing else. There's nothing. No one in the world who wants to be re-elected can cut down on expenses, and therefore we'll just be more money, and then we have some hyperinflationary stage, and then thereafter. Okay, forget about what they're going to try resets, and they're going to try to put the debt aside and say that doesn't count anymore, etc. But that's nonsense. You can't make debt disappear, because if you make debt disappear, all the assets that are backing this debt will disappear also, and therefore the debt, is there and will be whatever cheating they will do, and then then if you just briefly, I see first in hyperinflationary period or high inflationary period, and then of course there will be a collapse of the financial system. It's inevitable. There is no chance whatsoever, in my view, for the financial system to survive. Well, of course, they will do everything they can to turn off the taps, and nobody's allowed to take any money out, and they will try to introduce central bank digital currencies. That will fail too, in my view, and in the end, you will have the inflation or hyperinflation, and then you will have an implosion of the system. And that's the only way, in my view, for the world to come out of this. The debt cannot ever be repaid. It cannot be written off. It just has to implode, and we have to start from a much lower level again with no debt, because the world can never continue to grow with debt levels of this magnitude. That's my strong view.
In the face of unprecedented debt levels and the prevailing strategy of printing more money, how can the global economy navigate the inevitable challenges of hyperinflation and potential systemic implosion? With the global economic landscape experiencing unprecedented challenges, what factors contribute to gold's status as a safe haven asset? And how might its value be impacted in the current economic climate? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.